And we're live. Everybody, welcome to Digital Asset News and Not Financial Advice. This is our 6th episode from when we started. Amazing how time flies. To my right, we've got Guy from Coin Bureau and, of course, Ben from Into the Cryptoverse. Gentlemen, welcome.
Thanks for having us.
Thanks for having us, Rob.
Yeah, of course. And you know, it's if you don't, I don't know, maybe you're living under a rock and haven't seen these two gentlemen, but here are their respective YouTube channels. Ben's a powerhouse. It puts out some really great information, especially with all the things that he does on his website, which I steal religiously, all the information that he has. And then, of course, Guy, I've got two channels, Guy over at Coin Bureau and then Coin Bureau Clips. So if you haven't checked them out, links in the description. So, gentlemen, let's talk about it today and get into it. So the first thing is this. There's 4 different questions I had, and there's a lot of nuances to it. So the first one is this bull run. It kind of caught some people by surprise. Of course, some people said that they knew it the whole time. I think they're a bunch of liars, but whatever. And it really comes down to this. Can we sustain this little bull run? Is this still a bear, a bull trap? And what can we see throughout 2023? Next one is what are Bitcoin, the crypto market's biggest challenges to overcome? And to actually foster growth. This could be in any kind of direction you want. Third, it's all about the exit strategy. So I know we're far away from the blow off top and a parabolic bull run, but do you have a plan right now to take some profits when we get to that stage, as opposed to just buying the dip? Or are you one of those diamond hands forever people? And then lastly, since we've all been through multiple bear and bull markets, all of us, what kind of insights can you give to the people, especially to the crypto class of 2021? And then, of course, we'll do a little Q&A at the very end. So first things first, this is going to be difficult. So this mini bull run that we're going on right now, like, I don't know are we still up in the market itself, or do we take a little bit of a dip with the earnings report coming out yesterday? I haven't really taken a peek at the prices lately.
I mean, the NASDAQ is down, but the last I checked, the NASDAQ was down like a 1.5% or something, at least in after hours or in early trading. But
Yeah.
I mean, for the most part, now it's down 2%. Okay, so it has taken somewhat of a hit, but the Dow Jones hasn't really taken much of a hit, and the S&P is down about 1%.
Yeah, and then of course, how are we doing?
Crypto is dipping. It's certainly a noticeable dip, but just obviously in the last kind of half hour since that jobs data came out.
And that's and this is the big thing, because and we'll get into this. So I've been a pretty big bear lately, bearish sentiment. But I mean, with the rate hike slowing, the housing market sustaining, inflation reducing, the unemployment rate is declining. We'll take a look at it real quick. And then Guy did a video just recently, China reopening, and that's on the positive. Are we in for a soft landing? Is that what it looks like? And just to break it all down, we take a look here with the unemployment rates. So we just saw today, we are down to 3.4% from 3.5, 3.7 from October, 3.6, 3.5, and now 3.4. Also, we take a look at the housing market, purchase-only housing price index. I mean, we took a dip there, but now we're going up again. And then we take a look at personal savings. I mean, of course, in 2021 or 2020, when the coronavirus, it was astronomical. But people have bottomed out, and now they're starting to save a little bit more. And then also, we take a look at the sentiment, Michigan Consumer Sentiment Index. I mean, that took not an all-time low, but a pretty big dip in June. And we're right back up to where we were before. And then, of course, China reopening, like I said, Guy, in your video. So the thing is, are we on the precipice of something big? And can we sustain this throughout 2023? Guy, I'll start with you. There's a lot to go over, but this is what we got.
Yeah. I'll focus on a few things. I mean, first up, I'm amazed that the kind of mini bull run we've had over the past few weeks, I'm amazed that that's been sustained at all. Given the outlook. Okay, yeah. I mean, you're right, Rob. You can't argue with some of the statistics out there. Inflation is coming down, and it's clear that what Jerome and co at the Fed have been trying to do is working. And I think I remember seeing recently manufacturing output in the US is kind of down as well, which again suggests that this is working. That's what the Fed is trying to do. It is, and Jerome has said so. It is trying to suppress growth in order to crush inflation, and so that appears to be working. And obviously, we're getting. I think Bloomberg the other day said something along the lines of this. With the latest rate hike just the other day, we may be in for not so much a Fed pivot as a Fed pirouette. Which I thought
that's pretty good.
I quite like that. So I think there's obviously the markets are very optimistic given this. Again, I thought Jerome in his press conference he came across to me kind of fairly unequivocal. I mean, he said in black and white, we don't plan to lower rates this year. So. I mean, what I'm expecting another rise, another 25 point rise to, well, that would take us to 5% in next month, wouldn't it, at the next meeting? And then I kind of imagine that's where we'll stay for the time being, for the probably the rest of the year. Well, that's certainly what Jerome is implying. And obviously, there's certain things that the PCE, was it last week? The PCE came out 3.9, which is obviously well below interest rates now.
Right.
So, I mean, there's certainly positive signs, and I guess the market is taking a lot of heart from the fact that this is working. However, I think there are so many things, and as you say, things like housing seems to be holding up. We've obviously had this positive jobs growth today, so the economy seems to be taking it in its stride. Of course, I mean, I am looking at things like we had these very disappointing tech earnings just yesterday, wasn't it? I mean, I think those were Alphabet's, Google Alphabet's. Were they their worst earnings since 2016? Does that sound right?
The first time they've missed, I think, since 2016.
First time they've missed. Okay.
But again, a lot of the misses are just revised. I mean, the estimates are often revised down before they go out anyway. So
So is it? I mean, it looks like it's pretty positive, like I said, but you never know with the markets. I mean, can we really keep this going? I think that would be the big question. Can we keep this going in 2023? And even if we take a look at the yield curve, I mean, that's been inverted for quite some time. We can take a look at just like what you talked about with the missed earnings report. I think they're going to have some more coming out. So what do you think?
I think, I mean, it's an interesting one with the yield curve. Someone pointed out to me yesterday that Campbell Harvey, the guy who popularized this idea of an inverted yield curve leads to a recession, he's apparently now said that this time is different for the first time ever. So, maybe that seems to support perhaps the soft landing theory. It is an odd one and I mean, obviously people are buying bonds, but people are buying longer term bonds, aren't they? Which suggests that a lot of market outlook is not great for the short term. So I think many people still believe there is a recession kind of imminent. And of course there are still all these big macro factors. I think the war in Ukraine, I mean, that's now approaching its first anniversary, isn't it? Which is just crazy. And that seems to be escalating. I mean, from what I can gather, it's going to take a bit of time for all these tanks and things to get there. But it does seem that is poised to really get a lot more intense. Maybe as the weather kind of gets better. So there's that, and then of course we've also got this deal of China reopening, which I think it could fall either way. On the one hand, it's supposedly I think going to be good for supply chains, unclog those a bit more, but likely bad for inflation. Chinese citizens have around $700 billion worth of excess savings to spend.
Holy smokes.
Yeah, so that's that's a lot of money kind of waiting to sort of crash over the economy. Whether they do actually go out and spend that is another matter, but that's certainly something that's concerning me for the next few months ahead.
Eek. Well, I'll say this one last thing. One more thing China is crushing us on, because our savings account is dwindling, but of course we're going up a little bit. And then before I get to Ben, I will say that, the market doesn't like some type of instability or uncertainty. And I will say that as we move forward in the Ukraine war, America just said they're going to ship over their tanks. It seems like the more we get into it, the more comfortable we get, the more it's not like this type of thing that shakes the markets. Again, we were in Afghanistan for 2 decades, and it didn't seem like when we first went in, it shook the markets. But as time went on, we're just like, well, that's just how the world goes. So not that it's the right thing or the wrong thing, I'm just saying it seems like the market's like, whatever. So Ben,
it's amazing how quickly they shrug sort of thing. You get used to these sort of things. This huge land war raging in Europe that threatens us all, and it's like, it's been going on for a year now, and it's no longer making the headlines.
Yeah, they won't care. Unfortunately. All right. So Ben, guy, that's maybe we're looking at a softer landing, but Ben, do you have anything that could counteract that? Is there something that we're missing?
Well, I mean, I would start off by saying the path to a hard landing is not normally obvious. Normally, it's a process of thinking it'll be a soft landing first, and then it's not. I think most of the time, people's base case is not a hard landing, but we do get a hard landing every 10 years or so. So it is something that we have to think about. With that in mind, my general expectation for 2023 remains unchanged. I think it's the year that will wreck both the bulls and the bears. And, this is what we saw in 2019. This is what we saw in 2015. You have your bear market years of 2014, 2018, 2022. Right. And then you get these years that come after it that are incredibly choppy, and we're constantly chasing whatever the new narrative is, right? So for instance, right now we're chasing the narrative that inflation's coming back down and that it'll be a soft landing, but who knows what narrative we'll be chasing later this year. So I mean, my general expectation is that, this current run, I have no idea how long it's going to last. I imagine it's going to go on until either inflation it'll likely continue until you either see cracks in the US economy or you see any signs of inflation returning. So until that happens, I imagine you could still see sustained upside in risk assets. But there are risks associated, I think, with it. And one of those risks are inflation coming back. History shows us that inflation is not something that goes away easily. And this is why Powell, refuses to declare victory on it. Now, he did mention, by the way, that they are seeing their first signs of disinflation. And the minute he said the word disinflation, the market just spiked upwards. But the problem is that he's done his homework. He knows what happens when central banks declare victory on inflation too soon, and what happens, right? It's inflation just comes back, and then it becomes even harder to get rid of. So today we saw the unemployment rate come in at a secular low, and it hasn't been this low, in fact, since I believe 1969.
Holy smokes.
I believe we saw the unemployment rate at 3.4%. Now, what's interesting, if you look at the S&P, what the S&P did when it got to 3.4%, it rallied over the next 3 months by about 9% or so, 9 or 10%. But after that 3-month period was over, what happened? It then dropped 35, 40% over the next year and a half. And so we must ask ourselves, well, what would cause that? I mean, an unemployment rate at 3.4%, it would seem like, the U.S. economy is strong, right? And one of the things I've said many times is, you can find the signs of a recession in a lot of different places, except for the one place that matters, and that's the labor market, right? The labor market is the only place that you really don't see a sign of a recession in. But within the business cycle, the labor market is the last thing to move. So we always have to remember that as well. It's a very much of a lagging indicator. So one thing that I think that is it's the main left tail risk that we have to consider at this time is, and this goes back to what Powell said, the
Shoot.
goods and services ex housing, core services ex housing, that inflation has remained relatively stickier than some of the other areas. And so the unemployment rate at 3.4%, I imagine, is going to potentially renew some fears of rising inflation again, just because you still have a historically tight labor market, at least going back for the last like 50 years or so. I guess the main left tail risk is if you actually go look at the Cleveland Fed nowcast, they're actually forecasting that headline inflation is going to go up 0.63% month over month at the next report. But for reference, what it was last month was negative 0.1%. So they're forecasting it's going to go up 0.63% at the next CPI report. I have no idea if that's accurate or not. The Trading Economics website still says negative 0.1 is what they're, you have the website up. You can see the CPI for January 2023, 0.63%. That's month over month, by the way.
Wow.
So I think that's the risk, and so the risk here is if inflation were to come back at all, and I'm not talking about new highs. I do sincerely doubt that inflation is going to be going to new highs anytime soon. But if we have that risk at all of it starting to come back up and remaining somewhat stochastic, not moving down in a linear fashion, I could see the new narrative chasing as well. Maybe inflation's not going down in a linear way, and maybe the terminal rate has not been fully priced in. And if you look at the CME Group, the website, now if you look at June, now they're saying the most likely scenario is the Fed funds rate is going to be at 5.25%, meaning they're now expecting 2 more 25 basis point rate hikes. So one of the things I've said, and I'll just continue to say, I think 2023 is going to be the year where, we'll have rallies and we'll also see those rallies get faded. And it'll probably take a year or so of that happening before we see a rally that can really take us to new highs. That's my general expectation. In 2022, what did I say? I mean, I just said cash was king constantly in 2022. In a bear market, cash is king. It just is. In 2023, I think we see I think we see various phases where at some points you get really nice rallies that can take out prior highs, or at least local highs, not all-time highs. But you'll also see, I think you'll also see those rallies faded as we chase whatever the most recent narrative is going to be. And I think that a lot of those narratives are just going to be based around, is inflation going down in a sustained way? Is the terminal rate actually priced in? And so on and so forth. So, for me, to specifically answer your question with regards to Bitcoin, can this rally be sustained? I think it'll be sustained until you see true deterioration in the U.S. economy via labor market, or you see inflation go back up. We have another inflation report, in a week and a half? So if inflation comes in cold, then Bitcoin, I think, can keep going up. If inflation comes in hot, then it'll likely take a hit to risk assets. But even if we come back down, we can go on another rally later this year, right? That's what 2015 was. So 2015, we had 2 rallies that were both faded. 2019, we had one massive rally that was faded. So I think it'll probably be somewhere in between that. And then hopefully by 2024, 2025, we actually get into a rally that can take us to new highs.
Man, I got to tell you, the things you guys just said, it makes me realize just we're on this specific timeline. And just to get into your point, Ben, about, things just coming back. This is what Jerome's he's really trying to avoid. This happened in the 70s. We had inflation, then it went back down, and then they're like, okay, cool. We're out of here. We did our job. Congratulations. Mission accomplished. And then it just went right back up because they stopped cutting rates. So at some point they're like, and this is what I think Jerome is trying to get away from. But if we can do that for this year, if it's a soft landing or a hard landing, it really does come down to the cycles that we're used to, right? So it all starts with the having all-time high dip reset, 16, 17, same thing. Thing is happening right now, 2023. So if we go through a choppy year like we think we're going to do it, bears get wrecked, bulls get wrecked, unless you dollar cost average and try to take some profits like I've been doing, then maybe 2024 or 25, 26 will work itself out. But it looks like it could, but it's anybody's guess. Am I off there?
No, I mean, normally you have a recovery year after a bear market year, right? You just kind of go sideways for a while. And I mean, right now it's up only, right? Um, but we'll see. I mean, I don't think it's going to be up only all year. But I mean, it's nice. It's nice having some Bitcoin right now. That's the only thing I much really have. So missing out on the altcoin gains, of course. But yeah, I mean, I think Bitcoin will likely come out stronger at the end of this year after it sort of weathered the storm.
Well, that would lead me to the next question we talked about, which is, well, if we're going to do that, what's the challenges we have to overcome in crypto? And this could be anything. I mean, this could be, are we looking at legislation? Are we looking at the sentiments? Are we looking at the macro? When we look at the macro factors pretty hard, but since you're up there, I'll start with you, and Guy will have the last word on this one.
Yeah, I don't really. So the sentiment is something I think we easily overcome, because the sentiment is just driven by price action, right? Like everyone gets excited when the price goes up. Everyone gets depressed when the price goes down. So
that's also true.
I mean, look, if the price were to just kind of chop between 20 to 30K for the next 6 months or something, you'll see sentiment get better and better, I think. I mean, it's just a matter of like not watching the price drop every other month, I think probably the biggest things would be to see the macro look a little bit better. And you mentioned earlier we have the inversion of the yield curve, and that's one of the things I've spoken about before as well. But one of the things about the inversion of the yield curve that it tells us is, at least historically, is that upon the inversion, we're not in a recession, right? So when you see the inversion, you're usually not in a recession. It's after it uninverts that you get into one. And you have to think, well, how do you get into one? Well, the Fed has to aggressively cut rates. Why would they aggressively cut rates? Well, because they broke something in the economy, and they're forced to. So, yeah, I mean, I think that the macro is something that we could, seeing inflation much lower would really help. I mean, if you can get inflation, if the Fed can be successful in their goals of getting inflation back down to say 2%, I think that would be very bullish for crypto, because it means the Fed doesn't have to be nearly as hawkish on their policy. They don't have to have interest rates quite as high. They don't have to, have QT as aggressive. So I do think that would be a very positive thing for crypto. And then I think some regulation would be good, but I don't know. Like, these things always seem like they're going to happen, especially after major fallouts like FTX and that sort of stuff. But I mean, we also had major fallouts in 2018 as well, and nothing really changed. So. It makes me wonder, are we just going to kick the can down the road again without any, we had that press conference recently, and it was just Blitz Lotto or whatever. It's like, what is that?
I remember that.
Going after the thing that no one has even heard of. So yeah, I think the sentiment returning will sort of just come back as long as the price can sort of hold itself at higher levels. Probably the improving macro would be the best thing. And then the other thing is, the stock market. You would like to see the stock market really be more confirming of a new sustained bull market to go up to new all-time highs. And I think there are some people that are already convinced of that. I think I would require a bit more convincing, especially with earnings reports coming out as poorly as they have recently. Counterpoint to that is that the stock market normally bottoms before earnings bottom. So I guess it depends on how bad do we think earnings are ultimately going to get. Are they going to continue to deteriorate for the next 12 months, or is this as bad as it gets? Because again, the market is ultimately forward looking. So yeah, I would say it's a combination of a lot of these things. I mean, I think you need to see the macro improve some. I mean, by the way, the macro wasn't that great in 2019 either. And by 2020, we had a recession. By the way, in 2019, the yield curve inverted. I don't know if you guys remember. The yield curve inverted in 2019. We had a very brief recession in 2020. Of course, I'm not saying that it predicted that recession per se, but we did have a recession. And then we were off to the races when the Fed went back to aggressive QE and printing trillions of dollars. So I think we're in a somewhat similar scenario as 2019, but I would say it's a bit worse, just because inflation is also somewhat persistent, and that wasn't an issue we had back then. But if you roll the clock forward another year and a half, I think things are going to look a lot better, and that'll also be nice because it'll correspond to the halving and that sort of stuff. So just a bit more time is probably what we need to see sentiment really turn around.
Yeah, a bit more time for me to fill my bags.
Yeah.
So, Guy, it was interesting what you talked about before, Guy. The gentleman that you talked to about the yield curves, how the one who invented it said, well, maybe this time is different. So, I mean, is this time different? And so what is not if that's different, but what's the biggest challenge then, to get over this hump right now? Just like what I asked Ben.
I think I want to focus on a couple of other challenges that I think crypto's facing at the moment. And I think for me, it's kind of swinging. It's like a pendulum swinging between these 2 points. I think on the one hand, crypto's got this big problem around regulation at the moment, or should I say more accurately, around regulatory clarity.
Right.
And then I think at the other side, at the other swing of the pendulum, I think there's this issue of education, of how well people understand crypto, what it is, how it works, and crucially, I guess, how they perceive it as well. And I think I think that's been kind of thrown into relief in the last few days, because we've had Charlie Munger come out as reliably as he always does. He sort of emerges like a tortoise every few months and sort of croaks something about Bitcoin being the root of all evil, and then goes back into his shell or something. But anyhow, so yeah, I think crypto has this twofold problem. And I think it's important to draw a distinction between regulation and regulatory clarity. And this is something I was on a panel here in Dubai a couple of nights ago, and one of my fellow panelists made this point very eloquently. He said, we talk about regulation for crypto and how important it is. The traditional finance has had regulation for decades, and it didn't stop the likes of Bernie Madoff, did it? It didn't stop the likes of Wirecard and all these others. So I think but what's more important, I think, is regulatory clarity. In order for the industry to grow, in order for investment to come in, especially from institutions who are on the sidelines. And I don't know if you saw that report that's just come out today or yesterday about how institutional investment in crypto is way down. It was way down in January.
Really?
So my point is that I think crypto needs to see some sort of regulatory clarity, at least for these bigger players, especially, to be interested to invest in and help fund future development of the space. So I think that's one thing that I think crypto needs, and I'm not sure it's going to really get it this year. Maybe in Europe with MICA, which has obviously been pushed back to April. I'm not very confident of seeing anything much in the US. The UK is kind of making steps towards that. However, but at the other end of at the other swing of the pendulum, we've also got this idea about education, about how people perceive crypto and understand it. And I think, in a way, this might actually be more important, something that we need to focus on more. And I don't just say that as someone who's in the crypto education business, but I think, going back to what Charlie Munger said, the crypto still really has this image problem, and people are still so skeptical of it. And I don't think, even with regulatory clarity, I don't think we could expect big institutional inflows, smart money, if you want to call it that. I don't think we could expect that to come and support an industry that doesn't have anyone using it. So I kind of feel maybe we should be focusing on trying to make people understand what crypto can give them, the benefits of crypto, why it's not all one giant Ponzi scheme. And because then we can build an ecosystem. Then we can build an ecosystem of things that people actually use. And again, this is something I think is a generally positive story that went unreported last year about how crypto adoption across the world, especially in countries that are that are seeing their national currencies devolve, the likes of Turkey, Egypt, Argentina, all these sorts of places. But I think we need an ecosystem that regulatory clarity can then come in, shine some light on, and let more investment come in. Does that make any sense? That makes
100. This is what I've been harping on before. I'm glad you said it more eloquently than I could, because when I talk about regulation, everybody's like, "We hate Rob. he's talking about regulation. He's one of them. And everybody thinks I'm like an FBI agent or something like that. No, I think we need just some clarity. And I think this is the thing. This is why I like having both of you on, because I always learn something about what's happening. Because for the institutional investors, I was unaware of this report that came out that says that everything's slowing down. Because before, from Coinbase, when they put out their quarterly letters, they would talk about how, institutional investment is up. It's up. And it would be way higher than just retail. So if we're taking a look at institutional sliding down, that's something to be concerned about. But it doesn't seem like it affects the markets too much, because right now we're actually had a nice little rally. So is that more retail than what it was? Maybe. I mean, we're only a trillion something market cap. It's not like we are like way ahead. So what you said, Guy, makes total sense. It's not regulation shutting down Bitcoin and Ethereum, not that they can anyhow, but it's about giving us clarity. What's a commodity? What is a security? What is a currency? Just get that right, and then talk to the centralized players, the exchanges, and make them not commingle funds. Because I hate putting my funds into an exchange and then they go and buy a condo in the Bahamas for their mom and dad. That's just something I'm just not big on. I don't know if I'm wrong there. So, Guy, it makes total sense.
Good. Yeah, and again, coming back to something else I've talked about before, I think, this idea of industry standards that Eric Voorhees has kind of championed in the wake of FTX and all that. An industry that kind of self-regulates in a way that doesn't put up with entities who are not doing it the right way. Because again, and it goes back to this idea, regulatory clarity. Like, regulations will not stop scammers. They will not stop, bad actors or anything like that. But at least clarity will let proper companies flourish. And I think we were talking about this, maybe it was last week when we were kind of talking about securities designations as well. And I think it was Ben, was it you, Ben, who just sort of said, well, yeah, like, okay, if something is designated a security, then that could be a disadvantage. It could hinder that sort of project, but they'll work it out. They'll figure something out, but they need to know one way or another. It can't just be sort of, well, it might be a security, it might not be. You'll find out in due course.
Yeah, you'll find out. We'll let you know, that type of thing.
Yeah.
Okay. All right. So moving on to the next one. Good answers, everybody. So failing to plan is planning to fail. This is what I've talked about in the past, but it might sound odd, but I think the parabolic bull run, it'll sneak up on all of us. It's for some of us, not all of us. So what's your profit-taking plan on crypto? And this is moving into like the 2024, maybe 2025 season. Or are you going to diamond hands forever and never sell anything? Guy, I'll start with you because we just stopped off.
The classic Bitcoin maxi trope of diamond hands and living on a mattress in an otherwise completely unfurnished room. No,
right, you can do that. It's fine, but
no, I like my creature comforts a bit too much for that. Yeah. I think this. I mean, I want to learn lessons of past bull markets. In this next bull market, because I've not always been great at taking profits. I have taken profits in the past. It's something that I'm getting better at, but I am planning to take some profits. How I'm going to do that exactly, I'm not sure. I don't know whether I'm going to be DCAing out rather than DCAing in. I'm not sure whether I'm going to set a level yet that I'd be looking to exit at. But one thing that did strike me when I was thinking about this earlier was I want to, if here I am in Dubai, if I find, during the next bull run, if I see a nice house for sale and the estate agent or the owner is willing to take payment in crypto, then heck, I'm gonna buy it, because I think it can fall between these two poles. Like this idea of hodling on forever, I don't really agree with. Obviously, I don't want to sell everything. I want to keep a nice nest egg of crypto for the future. I'm never gonna sell out of crypto completely. But I must say, I'm warming more and more to the idea of using Bitcoin for what it was designed to be used for, as a medium of exchange,
Right.
and swapping that out for another asset like a roof over my head, which would be great. And I like this idea, and I hope we see more of it. I hope we see people actually using it, because I think if we get stuck into this hodl mentality and everyone just clutching on to what they've got for dear life, then it's just speculation. It has no use beyond that. I think it's kind of up to us really to use this stuff for what it was intended.
That's a good point, actually. Yeah. So okay. Yeah, it's a good point, because that's if for those at home, sorry, I'm getting Ben's cough, I think. For those at home, if you haven't read the Bitcoin white paper of Satoshi Nakamoto, it's only 9 pages. It's very fast. And you can take a look at it, and all the people that talk about, well, it's this or it's that, that's not what it was designed for. I mean, we can say what it is now, but it is for a medium of exchange, a peer-to-peer exchange. And I'll just leave it at that. But Ben, what do you got as far as like getting into, moving into 2024 and profit taking? Because you're going to start dollar cost averaging, later on, even more so. So how do you take some profits moving out?
Well, I would first say, never let a good bubble go to waste. First of all, I mean, look, we don't know what happens in 2023. Just like in 2019, we actually had a parabolic run to 14K. That was something that I feel like shouldn't have been, you don't let it go to waste. So, there's still a chance that Bitcoin sees a sustained move higher this year, for all we know. I mean, and I pointed to some of the risks. I mean, there are risks out there if inflation comes back. If the terminal rate is not priced in, but until you see a material change in one of those two things, Bitcoin, of course, it reserves the right to go as high as it wants to go. I mean, if Meta can go up 2x and Netflix can go up 2x, then why can't Bitcoin? So I think about. So I would say it doesn't have to be 2024. It could be even this year. It depends on just how heated the rally gets. I would say I would just DCA out according to the risk levels that I use. So, I mean, I have various risk levels and stuff that I use. That's what I used in 2019. That's what I used in early 2021. Unfortunately, the second move in 2021 was not picked up as easily from that stuff, because it was sort of just like a bounce to the same levels rather than going to any sustained new highs. So it didn't work out as well. But the first rally in 2021, just sort of slowly DCAing out, worked out quite well, because then we ended up dropping 50% in the summer. We had that summer lull, and everything dropped like at least 50 or somewhere around 50% or so. So I would say I would just DCA out according to the risk levels. But the other side of the thing is you can't sell what you don't have, right? So I don't really have much. I mean, I do have some altcoins, but not much. I mean, it's just sort of like relics of things that I had from years and years ago, stuff that's being staked and whatnot. I've mainly just bought Bitcoin for the last 6 months, 7 months. Haven't really bought anything else in crypto. So, I could always sell some Bitcoin if it moves higher, but right, as I said before, I mean, you can't sell what you don't have. So I know Rob has been micro DCAing the altcoins. So, you'll be able to sell those potentially. I won't, because I don't have any. But yeah, so I mean, Bitcoin is if it gets into one of these more sustained rallies, even in 2023, like, let's not discount it completely. I mean, it could happen. Then I would take profits, just like in 2019 when we rallied up 4x in like 3 or 4 months. So it's just something to consider. You never know when the bubble is going to come. You never know. And even in 2021 or even in 2020, it's not like we knew that it was going to go from 3K to 64K. I mean, that was not a common theory, not that quickly. Anyways, right. I mean, I think a lot of people thought it was going to get to 64K, but just not as soon as it did. And we also, I think a lot of people didn't think that was going to be the top, and it ended up more or less just being the top. So again, don't ever let a good bubble go to waste. If you see a rally this year, you have to take advantage of it. And if we just come back down and we spend another 6 months at lower prices, then you just get into the market again, right? And you slowly just wait for the bubble to come. Yeah. And I would say another thing too. It's okay to be bearish on something and still accumulate it, right? I mean, that's essentially what I did for all of 2019 and even 2020. I was like, all right, well, everything seems like it sucks, right? The economy seems awful.
Yeah.
But if there is another bubble, then I want to be a part of it, right? If crypto goes up again, I want to be a part of it. So I still think the same way today, except right now my crypto portfolio is just mostly Bitcoin. And by the way, it was also mostly Bitcoin in 2019 too, when we had essentially a Bitcoin only rally to 14K. I mean, the altcoin market did okay, but I mean, a lot of the altcoin market ended 2019 lower than where they started, whereas Bitcoin ended at about 2x higher than where it started. So that's something to think about as well. So yeah, I mean, just DCA out according to the risk levels, just like you might DCA in when the market is trending lower, and ignore the noise.
Yeah, exactly. And I got to agree with you on these ones. All those points are good. I like this. I got in trouble last time from your users when I showed this. So I'll show it again. No, I'm just kidding. This is time and risk bands. And there's another chart which shows just when Bitcoin is in these risk bands. And when you go to like these high risk areas, 18 days, this is when things are like pretty much a blow off top. And if you can take a look at this, and of course this is on another screen, you can kind of just tell like just how risky things are getting. And then for me, like I use this on my website. This is a shameless plug. Dan Teaches Crypto, 100% free. This was my exit strategy that I used last time, what I'm going to use this time. My cycle tops I'm using from looking to Bitcoin, Pi cycle top, NUPL, again, using Ben's time and risk, and then bottom callers, and there's this video there. So for me, it's just, I dollar cost average in last time, I laddered out, and I just like what Guy was talking about, I got a little bit too greedy, and I didn't sell when I was supposed to sell. I sold probably 50% of the things I was supposed to sell, and I screwed up on the other 30. And this time I have a plan in place. I'm going to stick to that plan, and that be damned. I'm never going to hit the top, and I'm never going to hit the bottom. I think I'm just going to try to get around. If I can get 70% or 80%, I'm very happy. That's about it.
Hey Rob, I on your website I saw that you had the Pi cycle top indicator on there.
Yes.
Is that right? So That's an interesting. It kind of reminds me of something that the guy was saying earlier. So that indicator basically nailed the first top, right? So
right.
I think it signaled within 1 or 2 days. But it's also an instance where the person who created it said it wasn't going to. They basically walked it back and said it wasn't going to actually predict the top. And I mean, in the end, that was it was right, because we ended up going to 69K, right?
Yeah.
But we also had a really big pullback. It kind of reminds me of the person who invented the yield curve saying, all right, well, it's worked for the last 8 times, but it's not going to work this time, kind of thing. Like where you can kind of trick yourself into thinking like this is the one time it's not going to work just because it feels like it's not going to. So we'll see. I mean, in the end, we'll see if the yield curve is a predictor or not. So far, it's always predict. I mean, the inversion of the 3-month and the 10-year has like I think 100% track record on predicting it. So.
Yeah, and that's what when I got into it, and I think we were all on the same page. When I got into it, I was like, there's no way it's going to repeat again, and I'll be darned if it didn't repeat again. And it repeated almost perfectly. I mean, this one's a little bit different. We had a couple of a double top, but I mean, it still worked out. And
yeah, no, I mean, I think the Pi cycle, I think it's a great indicator. I mean, it got it within 3 days, which is what, I think it was designed to do. But again, I think that, when you create an indicator and it gets close to like triggering, you often second guess the validity of the indicator, because now you're like, all right, well, maybe I underestimated what it could do, or over, something like that. I mean, I think we all have the tendency to do that. Like when you're thinking rationally, you can kind of say, all right, well, it'll go up to these levels. But once you get to those levels, everyone thinks it's going to go higher.
This is perfect. This is a perfect segue. So just like what we were talking about, we kind of Guy talked about, we shouldn't have, he should have sold more. Ben, you talked about some things. This is the next one. What kind of insights can you give because the class of 2021 to me is kind of like the class of 2017, 2018 without the monstrous centralized exchange screw ups. So what kind of insights can you give these guys? Because it's kind of hard just to watch your value go from like Bitcoin's going to $1 million, everybody says it is, to like, what the heck just happened? Now I'm down, 70%. That's not right. Ben, I'll start with Ben, and then Guy will have the last word.
I mean, I would just say time is the only secret to the cryptoverse. Really, it's nothing more complicated than that. And I say this as somewhat being self-aware of what I'm saying myself. Like, I constantly outline the risks involved, like in resurging inflation or underestimating the terminal rate for the Fed. But the one thing I've seen many times, and I've witnessed it myself many times, is that bears can sound smart, or pessimists can sound smart, which equates to more bears. But the bulls are the ultimate ones who usually get rich. It's because they just remain optimistic. So I would say don't mistake understanding what the risks are, or weighing what the risks are in terms of like whether you should have a position or not. Because at the end of the day, I think that time is sort of what bails the cryptoverse out. It's just the recurring cyclical behavior of emotions, that sort of that depression, that fear stage, and that hype euphoria stage. And right now, I mean, my best interpretation, right? I could be wrong. I've been wrong about a lot of things, so let's not forget that. But my best interpretation is that we're just in a phase right now where the market's going to chop around for the better part of the year, going to go up for a while, going to go down for a while, and it'll make people exhausted by the end of the year. And then by the time you get out into new all-time highs, a lot of people will forget a lot of the lessons that they learned in the 2022 bear market, right? They just simply forget those lessons, and they get drawn into the hype again, thinking it's only ever going to go up forever. So I would say, don't forget the lessons that you've learned. If your portfolio is down, usually time helps cure that, as long as it's not just a degen portfolio filled of full of micro caps. If it's the blue chips like Bitcoin and Ethereum, which, I mean, to be completely honest, I'm underweight Ethereum just because I think Bitcoin's going to outperform it right now. But if it's the blue chips, history shows us that that eventually you should be seeing better times. It's just a matter of time. It could take another two years, it could take another 3 years, but that's what history shows us. So I would say just try to be patient, wait, and remember that the optimists tend to get rich and the pessimists sound smart.
I did like that phrase, what you said last time. I'm like, oh, good, I'm not a moron. All right, so Guy, same question for you.
I want to pick up on what Ben was saying about time, because I think that's 100% correct. And I think one of the big problems in crypto at the moment, which, let's face it, has been around for a long time, is that the industry is full of so many people who who market crypto as one big get rich quick scheme, and the emphasis is on quick. It's like, you got to get in now. It's like, hey, I made X million overnight doing this, that, or the other. And we all know who those people are and how they operate. And it's a huge problem, because it gives people new to the space this impression that you don't have time, you have to act right now. And that isn't true. And two things I'll say about those people is, a lot of them aren't nearly as wealthy as they make out. I know that for a fact. And it is,
because Guy knows, because Guy meets him. All right.
And their whole business model is kind of predicated on this idea of other people's FOMO. Get in now. Don't use my Bybit link, etc., etc. So I think it's about filtering out all that noise, which is what it is, and consider the fact that really the wealthiest people out there, the people who are really rich, who have actual money in the bank, these guys have been, on the whole, playing the game for a long time, and they know it's a long game, and they know that get rich quick is not something that generally happens. That's not to say it's never happened before. That's not to say it hasn't happened in crypto, because it has. But people shouldn't look at it like that. Crypto investing is a long game too. Okay, you can get bigger rewards perhaps over a shorter time frame than you would in more traditional forms of investing. But yeah, going back to what Ben said, if you use time is on your side, if you stay in there, if you stay the course, then you can do well.
Yeah, I couldn't say it better. Perfect way. Well, guys, I can't agree even more. I mean, in 2017, I had that opportunity to cash out. I didn't in 2018. I let it all go down. I had two choices, like either cash out and be like, well, just take that 70% loss, or just dollar cost average. And then it goes off. And the people who stick around, like I've always talked about, just like the military, just show up with the right uniform and you usually get promoted. That's the same thing that happens with business. That's the same thing what happens in life, of getting better at any kind of skill. And it's the same thing that happens with any kind of investment, I feel. So if you're stuck right now in 2021, we've all been there and we've all experienced the same pain. Just stick around. We'll see you in 2024 and we'll all have, or 2025, and we'll all have a good laugh at the things that are happening. And then we'll give our advice to the people who come in 2025 who get in from the people that Guy just talked about. You got to get in right now because this is it. This is the only thing, because it's great for clicks. And then they are the bag holders. Anyhow, that will conclude today's episode. Gents, I want to say thanks for stopping by. Now we'll get into Q&A. We'll do this kind of I try to keep this short, but I mean, unfortunately, there's great answers, so I had to let it all play out. So this is what we'll do, a Q&A real quick and see what people got. Let's see. First of all, Free Church Press says short Bitcoin. Yeah, I'm not a big short person, but okay. Dermot says, that's a good one. DC in, DCA in, or DCA out for 2023. I'm going to say you can do both if you really want to. Guy, Ben, you want to take this one?
I mean, my guess is that, I mean, if you look at a lot of the metrics, we're fairly undervalued. It doesn't mean that we can't go. It doesn't mean that we can't go lower, right? We could easily have pullbacks and go lower, but in terms of a long-term investor, I would say this is the year to slowly get into the market, not to get out, right? The only way I would say to DCA out for me is if we get a true parabolic rally. And this is something to be completely honest. I was asked about this back in the summer of 2022 when Bitcoin was at 25K, and someone asked me, do you think I should sell Bitcoin? And back then, I was very convinced that we were going to capitulate in November, right? We talked about this for a long time, that we were going to go lower, and even then, I said no. I don't think it's worth selling, even though I think we're going to go lower. It's probably not worth selling, because even if we do, we're probably just going to bounce right back eventually, and it's just not worth the hassle of taxes. It's not worth all this hassle, and also you have to hedge yourself up. Being wrong. If Bitcoin rallies to like 35K or 40K or something, like, okay, then maybe I would start to get interested in scaling some out. But as long as we're at these levels, I just don't really. I'm not as interested in scaling out. I'd much more prefer to just slowly scale in, and honestly hope the price goes lower, just because I'd like to, get bigger bags before the next halving, right? Yeah, I would say it's generally going to be a year to scale in rather than scale out, and the only way I would change my mind on that is if Bitcoin sees a parabolic rally.
Perfect. Guy, what do you got? DCA and DCA out?
I don't really have an awful lot to add to what Ben said. Yeah, I think this is a year to slowly accumulate. I think this is a year to cautiously move in. And yeah, save yourself. The DCA is such a good strategy, especially if this is something you're relatively new to. Take the stress out of it. Don't try and time the market. Don't try and second guess the Fed, anything like that. In nice and slow, nice and regular. And yeah, going back to what Ben said about time, that will play out well for you in the future, I believe.
And I'm just going to say right here, I've been micro DCAing Bitcoin and alts. I'm going to start to increase that, because I think this is the year. If we're looking at the 4-year cycles, this is the halving, 2020, all-time high 2021. 2022 was the big dip, and I think this year is the reset. And that's where and we've taken a look at different alts and Bitcoin. When you start to DCA in or ladder in on the reset years, you really set yourself up for success years down the road. So I'm going to start doing that. But
Rob, I would clarify my response. What I was specifically referring to Bitcoin.
Okay, gotcha. So yeah, we'll say that Bitcoin, and then just to lay it out, one more thing, and that is this: I did take some profits, and I had talked about this on my channel before. And what it came down to this, because what I did was I have a problem, and that problem is getting too entrenched in not selling. So like I said, I've been buying Bitcoin for every day at $40. I did a very simple thing. I bought it at 16.7 all the way down here. So for the last month or so, or whatever it was, I spent $1,000. And then when it went up to, this is on January 9th, when I went to 21,000, I sold because it was up 23%. I made a small amount of profits. But just so everybody knows, on the next day, I'm still buying and buying and buying and buying. So even when I sell, I'm still buying as days go on. This right here could, of course, will probably turn into, I don't know, $150,000. But I just wanted to do it just to give my muscle memory in, so I actually get a little bit of profits put on the sidelines. And if it doesn't come down, it doesn't come down. But that's just what I have, and that's what I try to do as far as diversify. So now I'm not going to be doing any kind of profits, just going to be DCAing and a little bit more. So, all right, for that question. And then
can I say, Rob, I love that idea of tracking all that data yourself. I think I think this is something I found works actually quite well in kind of life generally. You know, if you've got a goal, whatever it may be, investing or losing weight or doing more exercise or something, it can really help if you just actually take the time to track it all, because then you can measure your progress and you get a much better sense of where you are. It's something that's worked for me really well over the last few years.
Yeah, well, you know what's going to suck is when I track that and I go, and then Bitcoin goes 100K, and I look back and go, oh my God, I could have made so much more. But I'll never time it, and I just want to just take a little bit of profit, so I have some cash on the side, and then I put it into other things, real estate being one of them. Not that $239 is going to be the end all be all, but as time goes on, I really ramp up. I think we'll be okay. And that would answer Aristotle's question: how do you accumulate and be bearish? It's very simple. Just like Ben talked about and Guy talked about, no one really knows. So I can accumulate and go, I don't know where things are going. I actually hope things go down, because then I can buy it at a lower price, because I know as time goes on, we'll be good. And then one more question. Philip, why are the whales selling? Are the whales selling? I don't know. Anybody want to take this one?
I'd have to look at. I think some whales were. I think some of the larger wallet sizes were going down some. If you look at at least the stock market, retail trades have made up a larger portion of the trading activity than they did at the hype in 2021. They're making up a larger portion today. So essentially what's going is retail is sort of leading the rally, and institutions don't quite believe it. But look, I mean, sometimes retail's right. I mean, like, that's the truth. There are times where retail is right and institutions chase it later. Hedge fund managers basically chase because they're worried about getting left behind. They're humans too. But yeah, I mean, retail is certainly, I think, taking the lead on this rally more so than some of the larger players.
Yeah. And Guy? Well, I mean, that's just it. We don't. No, go ahead. Sorry,
I mean, I guess whales, whales quite likely have large debts elsewhere. Interest rates going up. They've got commitments to meet there. So maybe they're selling to cope with their debt repayments. That would be my best guess.
Yeah, there's only a couple of markets that are liquid 365, 24/7, 365, Forex and crypto. So people got to get those profits out. Two things, Guy, that report that you talked about for the institutions slowing down, you guys going to do a video on that one over on Clips or main channel?
Quite possibly, yeah. It's on CoinDesk for anyone who wants to have a look at the article itself. But yeah, I think we might well cover that. Yeah. I'll talk to the team about it and see if we can get it on the schedule for next week.
Sure. And then the last question is Thursdays or Fridays moving forward. Usually we do Thursdays. Fridays, Guy had a commitment over at the Metaverse, and we
Yeah, it
couldn't
was
make
my
it.
fault.
I think there was
Apologies
I
for
think
that.
I made a mistake last week because I think I said we do it every Fridays, and then people were confused.
Oh,
Which is funny that I said that, and then it ended up being Friday.
It's like you knew something we didn't, Ben.
So,
you are manifesting things, Ben. You are
No,
manifesting.
generally Thursdays.
Yeah, generally Thursday, everybody. And that's it. So look, we've gone a full hour. These guys are busy. Ben's got 10 kids running around, and Guy's got everything to go meet with. So that is it for today. So gentlemen, thanks for coming on. Again, you can find Guy from Coin Bureau and Coin Bureau Clips, and Ben from the Cryptoverse. Also, his website, there's a link in the description for that. But that's it. So I think next week we are on Guy's channel, right?
You are, yeah. We are.
All right. So we'll see you guys
Looking forward
on
to it.
Thursday next week.
See you then,
Yeah.
guys.
Thanks, everybody. Bye.
Thank you.